Have you ever noticed how the market seems to have a habit of taking out your stop loss, reversing instantly, and then running in the exact direction you originally predicted, leaving you behind and frustrated? Have you ever asked yourself if there's actually a deeper reason why it keeps happening? And what if I told you that this isn't just random at all, but a repeatable pattern that smart money uses to manipulate liquidity? A pattern you can learn to spot. So instead of getting trapped, you can anticipate the shift in structure and catch the move with precision. That's exactly what we are going to be breaking down today in this video brought to you by CoinLenity. CoinLenity is a leading online edtech company dedicated to revolutionizing financial education. Our mission is to make finance accessible and understandable for all, regardless of background or experience. Through comprehensive courses on forex, stocks, investing, money management, and financial planning, we empower our clients with the knowledge and confidence to navigate the financial world with ease. Now, in this video, we are going to be talking about the ICT breaker pattern. But before we dive into this topic, I will need you to take a little bit of your time to subscribe to this channel, like, and also hit the notification button so that I can get notified whenever we upload new educational content. Do remember that you can also earn reward prizes like cash rewards, training bonuses, and so on and so forth by engaging with our educational content. So, the more you engage with the educational content, the more you can earn reward prizes. So to learn more about our reward program, you can click on the link below in the description area. Now, what are breaker blocks? So to understand breaker blocks, you first need to actually know what an order block is. And to understand what an order block is, we first of all we need to understand what support and resistance is. So support and resistance is basically areas in the market where price tends to have trouble breaking through. So support acts like a floor, while resistance acts like a ceiling. Now, the other blocks, the breaker blocks, are there are various types of support and resistance levels. Now, for the other block is usually represented by if you're in a bearish trend, a bearish order block is going to be your bullish candles, and if you're in a bullish trend, the bullish order blocks are going to be your what bearish candles. So when the market comes to these levels, they tend to what find support or resistance and continue in the same direction the previously that is the market is going to continue in the direction it's trending at. So if the market is bullish and price comes to the bullish or price retraces to the bullish order block, the market is going to continue going higher because the market is probably going to find a support at this order block here and continue pushing higher. Then for the bearish side of things, it's also the same thing. So when the market is in a bearish trend and it retraces to a bearish order block, at that point it finds resistance and continues in that same direction. So moving on, let's talk about the bearish breaker block. What is a bearish breaker block? So a breaker block is actually a failed order block. So when we have another block that fails, that is a kind of that qualifies it as another block. So we have another block that fails, then we have a break of market structure also. That signifies or that qualifies a breaker block. So as you can see in this rough description here, we have higher highs, higher lows, higher highs. Now remember, we have another block here in this trend, in this uptrend, right? Now you can see that price breaks that trend. That is from bullish to bearish. Price breaks that trend. Now the other block that was here that failed is going to be what we are going to be using as our breaker block. This is what is known as a breaker block. And once price gets back to that breaker block, we are going to be using that breaker block, which was formerly a bullish order block, now a breaker block because price failed at that order block. Now that zone or that zone turns into a breaker block. So when price then for the bearish example, when price comes back or retraces to that bearish order block, to that bearish breaker block, you're going to be expecting a resistance there. So price is going to have a hard time pushing above that area. Instead, it gives us what the continuation. So now let's look at this example right here. So you can see that clearly we are trending in the upside. So we are bullish, but we had a high, we had a low, we had a higher high, right? And this is going to be a break of market structure. That is, if price breaks this low, we have a break of market structure. And what happens? Price breaks that low, and what price retraces back to the breaker block here, which was formerly another block when price was in a bullish trend. So once it does that, it retraces to this breaker block, then we have what a continuation. All right, so here is a live example of this breaker block in action, the bearish breaker block in action. So as you can see here, we are trending upwards before, or we had a bullish trend previously. Then we got to this area, we broke structure, right? Now, before we broke structure, when this was still trending upwards, we created another block here, which you can see. I marked it out with this rectangular two here. Now, once price breaks this low, this is a break of market structure, and we have a failed order block in the process. Now, this failed order block becomes the bearish breaker block. So we expect price to what, find resistance there when it comes back to test that area. As you can see in this continuation, you can see how price beautifully comes back to that zone and tests that breaker block before what, continuing its journey downwards. All right, so moving on, we have the bullish breaker block. Now, what is the bullish breaker block? The bullish breaker block is essentially the opposite of the bearish breaker block. Now, for this illustration, you can see we have a trending trade here. That is, we have a bearish trend here. We're creating lower lows, lower highs, and lower lows, right? And here we have our last order block. And when price breaks structure and break above this last lower high here, this order block here, this bearish order block turns into what? A bullish breaker block. So as you can see, we expect price to come to that breaker block, find support, and what keeps pushing upwards. And this is kind of a rough example on the chart of how this plays out. So you can see we had a bearish movement, then we suddenly broke structure here, which you can see. We broke structure here, and we have what, the last order block that's filled to hold price here, and that's what we're going to be using as what, a breaker block. And what does price do? Price comes back to that breaker block and what, sets off going higher. Now moving on, let's look at a typical example of this in action on the chart. So as you can see here, we have what, a bearish trend one, and over here we have what, the break of market structure. So you can see where the market did the break of market structure with this line, and before the break of market structure, remember we had another block here that failed to keep price. So price came to the other block, tried to go below, but it couldn't. So the other block failed. Now what I'll be doing here is to mark out the breaker block and wait for price to what, um price to retrace into the breaker block for me to take my movement. Now, uh, you can see here price what retraces to that breaker block. So this is how you frame your trade using the breaker blocks. You set your entry at the breaker block, set your stop loss at the extreme low or high, depending on the line, that is the side of the chart that you want to trade on, whether it's buy or sell, depends on you. So if you're selling, you set your stop loss above your entry price. If you're buying, your stop loss needs to go below your entry price. So as I'm buying here, my stop loss is going to be below this low, and once I hit my target profit. So guys, moving on, in the next section of this video, we are going to be going over to the coin learning personal learning area to talk about the courses available on the personal learning area. So over here is the Colonities platform. This is our homepage. Now to get to the courses section of the personal learning area, what you need to do is to log into your account. So if you don't have an account, you can also sign up by clicking on the diamond button here. And if you don't know how to sign up to the Colonities platform, we have a video prepared to teach you how to sign up to our platform. So what you need to do is to click on the link in the description area below, and if you get the video on the steps on how to sign up to what, the personal learning area. But for the essence of this video, I'm going to be logging into my platform. That I'm going to be logging into my Connectis account to what, access the course. And what you need to do is to come over here. If you already have an account, come over here, click on the login section, and wait for that to load. Now, after clicking on the login button in the previous page, that should bring it to this page. So for me here, I signed up with Google, so I'm going to be using Google to what, to get into, that is to sign into my account. So what I need to do here is come over here, click on continue with Google. That should bring up this dialog box for you where you need to select your Gmail account you used. Then for me, this is the Gmail account I use. So what I need to do is click on it, give it time to load. So guys, as you can see, I'm already logged into my account. So the courses section of the personal learning area, if you want to continue learning more trading concepts like the one taught in this course, you can take up any of our educational courses available on our platform. These courses are designed in such a way to guide you through the beginner to advanced concepts in trading. So if you're interested in taking up any of our courses, you can click on the link in the description area below. And to get to the course section of the personal learning area, what you need to do is to come over here and you click on the course icon and give that time to load. Now, after clicking on the courses icon in the previous page, that should bring you to this page, which is our courses page. Now, once you're on this page, you can scroll to the bottom here to find the list of our courses. So we have two types of courses. We have the beginner course, that is, we have the signature courses and the premium courses. Now, what are the premium courses? These are well in-depth and advanced courses for intermediate traders that want to further their trading journey. Meanwhile, for the signature courses, it's for people coming into the market newly and they want to get a feel of how the market works, what it is, how to trade, how to the basic things in forex, and also some strategies in forex that can use to make money. This is available on the signature courses. Now, to get any of these courses, what you need to do is to come over here, click on the course. Like for instance, I click on this one, I'll just give it time to load. Now, once it loads up, it should bring you to this page, which is the course page. Now, on this course page, you get to learn more or know more about the course you're buying, how many lessons are in the course, the type of topics covered in the course, and so forth, and so on and so forth. So once you're on this page, you can go through the list of or the topics taught in the course. Then, if you're satisfied, what you need to do is to come over here and you click on um take my course button. My course button, once you click on it, give that time to load. It will actually take you to the next page. Now, after clicking on take the course button in the previous page, that should bring you to this page where you need to simply come over here and click on add to cart and give that time to load. So the next page you're going to see is this page where it will ask you to fill in your details, your email, your address. As you can see, that's already done here. And after doing that, you need to select your payment method of payment. So once you do that, like it's already on Monify. Once you do that, the next thing to do is to come over here and click on place order now. So after clicking on the place order now button, that should bring you to this page where you need to pay. That is, this is the checkout page where you need to actually pay for the course, either by bank transfer, card, USSD code, or phone number. Anyone you choose to, they are all there for you. You can take advantage of any of these payment methods, guys. So guys, that'll be all for this video. Remember, do not forget to like, subscribe to this channel, and also hit the notification button so that I can get notified whenever we upload new educational content. My name is Emmanuel from Conley, and I will see you all in the next video.